Hello people, continuing our marathon discussion further. Next we are revising accounting standard 26 that talks about intangible assets. There is a lot of overlap between AS 10 and AS 26. Many provisions are similar. You'll get to know this. Now, what are some of the examples of intangible assets according to you? Goodwill, patent, software, copyright, all this. So, one thing is wrong there, which I'll clarify. So far good, huh? Yeah, all right. Sir, AS26, just like PP, AS26 also has a definition. Because earlier, no, when somebody used to ask us intangible asset, we used to say something which you cannot touch or see, feel, or used to play that game. Right? See, standards are gazetted documents, notified documents. Can they say intangible asset means you cannot touch or you cannot feel? Yeah, it feels a little odd, yes or no, right? So they have brought in a sophisticated definition. Whichever asset satisfies the definition gets called as intangible asset. What is the definition here? Definition is important over here. If you want to call a component as intangible asset, one, it should be identifiable. Second one, it should be a non-monetary asset. Third, without physical substance. Fourth one, it should be held for use. Usage is same. Production of goods, renting service, admin purpose, rental purpose, same as people. If if all these are satisfied, then a component gets called as what, sir? Intangible asset. Let's go one by one. First is what? Identifiable. Sir, if you want to call a component as identifiable, you should be able to separate it and sell it. You should be able to separate it and sell it. Now, in ArivuPro ka balance sheet, let's say we have goodwill, 50 lakh rupees. Assumption. You want to buy? We'll give it to you. 50 lakhs, so goodwill, we are showing as intangible asset in our balance sheet. You want to buy? Any takers? Okay, 5 lakhs. 500 rupees per. Anyone? No, that also no. Why? Sir, if I have an iPad, can I sell iPad separately? Can I sell my laptop separately? Can I sell a software separately? Can I sell my patent separately? Goodwill? Can I sell separately? Now that means goodwill will fail which criteria? First criteria. Goodwill is an intangible asset which is shown in balance sheet. But accounting standard 26 ka provision is not applicable for goodwill. Because goodwill will fail which criteria? Identifiability criteria. Goodwill is accounted as per accounting standard 14. Amalgamation, we have seen there. Okay, so don't apply AS26 ka provisions to goodwill because it fails which criteria? Identifiability criteria. In balance sheet, yes, of course, goodwill is shown under intangible asset. But just that for this goodwill, AS26 does not apply. Which applies? AS14. Okay, this one. Okay, so if you want to call it as identifiable, you should be able to separate it and sell it. Second is what? Non-monetary asset. Sir, monetary asset means their value is fixed. Their value is fixed. If you have 500 rupees Gandhi note, right? Today also it is 500 rupees Gandhi note. Tomorrow also 500 rupees Gandhi note. So means what? Value is fixed. If you have sold goods to your debtor worth 1 lakh, how much will you recover? 1 lakh. Debtor will give you more or less or 1 lakh? 1 lakh. That means value is fixed. So cash, bank balance, debtors, creditors, loan taken, loan given, all these are examples of monetary assets because their value is fixed. The assets whose value is fixed, we call it as monetary. That means what is non-monetary? Value fluctuates. Any asset whose value fluctuates becomes what, sir? Non-monetary asset. Your property, plant and equipment, your investments, your intangible assets, all this value will change. Suppose today if I buy a software by paying 5 lakh, after 1 month, if I sell it, will I get 5 lakh only or it could be more or less? It could be more or less, meaning value is fluctuating. If it is a fluctuating asset, then it is what becomes what, sir? Non-monetary asset. That's the second feature. Identifiable, non-monetary asset. Third one is what? Without physical substance. Now your touch or feeling will come into picture. Okay, without physical substance. Intangible assets are those assets that they don't have a physical presence. Okay, but hang on. There are some intangible assets, or there will be some intangible assets which will have a physical presence. Like I purchased a software, but I got it in a pen drive. I purchased a software and that vendor, no, he put that software ka, whatever key, whatever you call it, I don't know, that file inside a what? A software, inside a pen drive and gave it to me. And he told, just double click and installation will happen. Okay. Now, sir, that software is inside what now? Pen drive. Pen drive, can you see it, touch, feel? But standard says without physical substance. That means that software I will eliminate. What does the standard mean by without physical substance? Means the value of that physical substance is immaterial. The value of that physical substance is immaterial or not significant. Like I paid 10 lakh rupees for software, but that software came in what? Pen drive. 10 lakh rupees I am paying for pen drive. 10 lakh rupees I am essentially paying for what? The content inside it, which is a software. Pen drive ka cost at best could be what? 300, 400 or whatever. Yes or no? That means value is high or not high. That is what they mean by without physical substance. Okay, G? Okay, G? This is one. Sir, what if the value is material, sir? Value is material. So, whenever you have an intangible asset which has a physical substance, no? Standard says you have to check which is the dominant element. Which is the dominant element? Like, let's say I purchased a laptop. Inside my laptop, operating system ka software is already installed. Microsoft ka software is already installed. Right? What did I buy? Laptop. My intention was to buy a laptop, but that laptop came with some inbuilt softwares. Music player or operating system, whatever. Yes or no? Now what we should do? Because it has software element also. It has tangible element also. It has PP element also. It has intangible asset element also. Yes or no? So if a component has both tangible as well as intangible element, you check for something called what, sir? Dominant element. If the dominant element is a tangible means something which you can see. If the dominant element is, if it's a tangible item, then the whole component, you don't have to separate, then the whole asset will get recorded as what? PP, because tangible assets are recorded as per AS 10, which is PP. If the dominant element is an intangible asset, then the whole value will be booked as intangible asset. Now, in my software which came in pen drive example, which is dominant element. So the software which came inside a pen drive, which is the dominant element, software. That means the whole value will be booked as what? Intangible asset. In my laptop example, laptop which has a software, which is a dominant element. My intention was to buy a software or my main intention was to buy a laptop. So which is dominant element? Laptop. That means the whole value will be booked as what? P. Like that. You'll have to check and accordingly categorize. Done, G. So identifiable over, non-monetary asset over, physical substance over. Last one is held for use. This one you know, same as PP. That intangible asset either should be used to produce some goods or render a service or admin purpose or rental purpose. One of the four uses should be there. Okay. This is the meaning. There is also RC. What is RC? Full form is what? Recognition criteria. Same as PP. Tell me what is it? Web and cost measurement. See. No change. Done. Next. Exchange provision. I am happy now. Same as AS10. Exchange we discussed, no? AS26 ka exchange provisions are also same. I don't have to tell that again to you. I think you're comfortable with that. Okay. Now, cost. Cost is also same. Okay, this one you tell pa. Same. Cost for intangible asset also can be categorized into three. What are those? Net purchase cost, DAC and DSR. No. Hang on. When you say DSR, you should have little buku. Sir, DSR is a repair cost. Building can have repairs. Software will have repairs. Patents will have repairs. Now that means DSR cost, do you think will come for intangible asset? Cut off that. Take the other things. What are the other things? Net purchase cost, same. Directly attributable cost, same. DSR, not. Okay, now. What are the examples of DAC here? Some of the examples of DAC, can you give me? First of all, DAC means what? Meaning is what? The full form is directly attributable cost. Thank you so much, people. But tell me the meaning of it. DAC means they are those costs incurred to make the asset management ready to use. Some examples of DAC are installation charges, patent you have to register, registration charges. Software, I may not use it directly like that. I may customize. So customization charges. All these are examples of what's a DAC. Cost exclusion also ditto. Same as PP. General administrative overhead, selling and distribution overhead, refundable taxes, right? Relocation, reorganization, usually not there. Any sort of promotional expenditure, and even this one, this could be one important one, training cost. Training cost given to the staff. Let's say there is one software. Let's say I'm using SAP. Okay. SAP is a big software. No, it requires a lot of training before you get comfortable in using it. My staff are not comfortable using SAP. I gave a training. And training cost was 5 lakh. The training cost which I gave it to my employee so that they can use a software called SAP. And how much did I incur for training? 5 lakh. Now 5 lakh ka training cost, can I add it to SAP ka software? Can I add? You know the answer, no. Why is that is? Sir, the cutoff is, you can add directly attributable cost means what once again? That cost incurred to make the asset ready to use. Now here just analyze it in the normal front. Sir, by giving training to employees, who is getting ready? Employee is getting ready to use the software. Software is already ready. Suppose there is one employee who is already trained. Then can he use the software from today only? Yeah. But by giving the training, you are not making asset ready. You are making who ready? Employee ready. So hence the standard says training cost, boss, is not asset related. It is employee related. So don't add it to the cost of PP, but rather transfer it off to PA. This is one. Need a minute. Next one. Oh, wonderful people you are. Intangible asset acquired through government grant. Now our government is so Dharala Prabhu Karna, they gave intangible asset to us. At free of cost. A government gave us one software at free, sir. Possible. Can happen. But probably not in India. Maybe Habibi country. Yeah. All right. But yes, sometimes it happens. It's not, like we have seen also, like suppose they want to too much. In the interest of time, let's not go there. Not relevant. Let's only maybe stick to the exam related things now. Okay, sir, there is a software which is worth 25 lakh. Government gave it to us for free. Election campaign. Vote. One vote, 25 lakhs. Okay, yeah. So we received software for 25 lakh free. What we should do? Should we record it? Should we record this software as a provision? So first I'll tell you the provision. Sir, if you have received, the same as you will see in accounting standard 12 also, you must have learned this, right? So if you have received any intangible asset at free of cost, standard says record it at nominal value. That nominal value could be 1 rupee, 10 rupee, 100, whatever, your choice. Because that asset is there with you. So let it come inside the books. For that sake, the standard says when you have received an intangible asset at free of cost, record it at nominal value, small value, 1 rupee, 10 rupee, whatever. You don't have to amortize and all, just show it. Okay. Now, second case, more relevant case or more dependable case. Suppose you received that same software at a concessional value. What is that software ka worth? 25 lakh. But government told give us only 5 lakh, it is enough. Instead of 25 lakh, you give us only 5 lakh. I mean, this is market value or concessional value. So if you have received any intangible asset at concessional value, standard says record that intangible asset at concessional value itself. Meaning how much ever price you paid, recorded at that value. How much did we pay? 5 lakh. What is the entry you will pass? Software account debit 5 lakh to bank account 5 lakh. And this software you will have to amortize over the life. So this is the provision about government grant. Free means you recorded at nominal value. If you get it at a lower price means recorded that low price itself. Whatever money you paid, recorded there. Next, this is quite important from this particular standard. Usually a lot of questions from this have come in the past and it has a good scope. One of the examiner's favorite topic from this particular standard. I'm not saying this will come in this attempt, just saying that this is examiner's favorite is all. I don't know what will come. If I know, obviously I will be the first person to tell you. I don't know. I am not setting the paper. My intention is only to cover. Okay. And don't believe that market strategy of this will come, that will come. Some attempts may it will work. Some attempts may it will not. Keep everything in your hands, much better. That's what I would suggest. The rest is your judgment. Now the concept is internally generated intangible asset. What is this? Sir, we are very creative people. Mark Zuckerberg Vamsha. Okay, that family we belong to. So we don't buy intangible asset. We make our own intangible asset. We don't buy. We rather develop our own intangible asset. That we call it as what? Internally generated intangible asset. This is the concept. We are not buying it. We are developing it. So whenever there is an internally generated intangible asset, what we have to first check is segregate into two parts. Goodwill, others. Goodwill, others. Sir, what is this internally generated goodwill, sir? You remember your bachpan, 11th grade or 12th grade. You found out goodwill, average profit method, super profits method, some blah, blah, blah and all you have done, no? All that goodwill, we call it as internally generated goodwill. AS 26 clearly prohibits accounting internally generated goodwill. You cannot show such goodwill in your balance sheet. Because as such goodwill you cannot show. Why? It fails which criteria? It fails which criteria? Identifiability criteria. So internally generated goodwill you cannot account. But goodwill came as per amalgamation, sir. That we call it as purchased goodwill. That we refer to as purchased goodwill. Because that goodwill came when you purchased a business. When you purchased a business, that goodwill came. So that is a purchased goodwill. But here what we are referring to is internally generated goodwill, which you have calculated as per your average profits method, super profits method. That you cannot recognize. So first find out whether it is internally generated goodwill or whether it is others. Okay, if it is not goodwill, but if it is others, then this others are further subcategorized into research phase expenditures, development phase expenditure. Research phase, development phase. First I'll tell you the provision. Research phase expenditure you cannot capitalize and show as intangible asset. Whatever you have spent for research phase expenditure, whether it is 1 rupee or whether it is 100 crore rupee, does not matter. That entire amount will go off to P&L immediately. No deferment, immediately. Okay. What is this? Or maybe you're looking at me weirdly. Let me tell you this first. Sir, I'm developing, let's take this COVID example only. Sir, when COVID occurred, many organizations, the pharma industries, they were doing research for COVID vaccine. They were researching how to find out the cure. Everyone were successful. Huh? Everyone were successful or only few of them? Only few of them. Yes, no. The few of them who were successful, when they started research, were they 100% sure they will find the cure? No. Because if you check the history, they say for most of the dreaded disease, till now we have not found vaccine. COVID is probably the first thing we actually found some vaccine and marketed. I don't know whether it cured or not, but it's a different issue. But many of them didn't take also. That's altogether a different story. But what I'm trying to say here relating to this context is, sir, when you start, see, when you're developing a cure, when you're developing that medicine, first you will start what phase? Research. Correct? No? Research is basically acquiring information. Right? At research phase, are you 100% sure that you will be able to develop that medicine? That's what the standard is saying. Research is basically a knowledge acquisition phase. Now, what we are doing here is knowledge acquisition phase. By attending my class, pakka you will clear exam. No, you have to study. Hey, no, yes, sir, no, you have to study. You think, yes, sir, Magana is putting everything on me only. No, after class, not my class. After anyone's class, you have to go home or wherever the hell you, wherever it is that you have to go and study. Yes or no? Then only clearance will happen. Correct. Now, same here also. Sir, research phase is just a knowledge acquisition phase. At research phase, you will 100% not know that whether you will have intangible asset or not. Correct or not? That's why hence the standard says at research phase, you cannot prove two things. One, whether intangible asset exists or it does not exist, you cannot prove. Because you are just what, sir? Trying out basically. And second, even if you say, no, I am confident, I will find cure. How much benefit you will get? No, you cannot assess with certainty. Feb also you cannot determine properly. Hence, due to this, what standard says is, as a thumb rule, entire research phase expenditure goes off to P&L immediately, not after 2 years, not after 5 years, not over a period of 5 years. No. This year, if you have spent 100 crore research, entire 100 crore will be booked as an expense in this year P&L only in one shot. No deferment. This is important question which they ask. They will say, company incurred research expenditure of 10 lakh. They want to amortize this over 5 years. Comment. Acceptable or not acceptable? It has to be transferred to P&L immediately this year only. No deferment allowed. This is about research. Okay, Naji. So research is successful. Research is successful. Then what we'll do? Then we will start developing that medicine. Yes or no? So after research comes something called what, sir? Development phase. This is acquiring knowledge or this is building the knowledge there. This is more like the development phase. What standard says is development phase expenditure. You are doing an application of knowledge now. You have already acquired the knowledge. Now you are applying it. So development phase expenditure, you can capitalize. You can capitalize provided certain conditions are satisfied. For our class purpose, I used to call this as TRFRC. TRFRC. If TRFRC is satisfied, development phase expenditure can be capitalized. If this fails, you cannot capitalize. Sir, what is this TRFRC? Sir, I'm using this name because next in CA final Ind AS 38. Same thing. Acronyms, nothing will change. Same chart. If you open my CA final chart also, same thing you will see. So I'm trying to keep the things as continuously as possible so that you can also remember it better. So that's the reason all these acronyms. Someone said traffic is better. Yeah, I know, but I can't change now because I've already written in chart book. So if you want, you can remember it as traffic, but I remember it as TIFRC. That's stuck in my mind. So okay, T for technical feasibility. Once I call it out, then 1 minute, few minutes we'll spend on this. Technical feasibility. I for intention to complete. A for ability to use or sell. F for future economic benefits. R for technical, financial and other resources. C for cost measurement. If all are satisfied, if all of them are satisfied, then development phase expenditure will also get capitalized and shown as what? Intangible asset. Actually, we show it as intangible asset under development, but that's okay. Leave that. So far, good. If this fails, if any of this fails, then in that case, if any of this fails, then development phase expenditure also goes off to P&L. Okay, people. This is a fund. Now, what is this technical T for technical feasibility? What is this? Sir, to develop the product also, it will take a lot of period of time. Yes. No? Now, if for world population you are developing COVID drug means that's a humongous, huge task. Yes or no? So first condition says check whether you have technical feasibility. Sir, for doing the research, you may do it with 5 scientists. But to develop that particular medicine for the whole population, you may need hundreds and thousands of scientists to machinery, investment and all that. So check whether technical expertise, whether you have or don't have. That's a T part, technical feasibility on. I for what? Intention to complete. Even development phase expenditure goes on for 4-5 years. This is true for our course. Josh may people start CA course. After few attempts, they'll be like, not for me types. So, sorry, not you. You are Uma people. You will clear. All of you, each and every one of you will clear. I'm telling others. Others, no. I. What is that? I hear. Intention to complete is there or not? You just check. Because development can also go on for 4-5 years. So, whether you have it in you to stretch for 4-5 years, check. That is your intention to complete. A for development is one thing, but after development, using that product or selling that product is another thing. So check whether you have marketing expertise or selling expertise. That is your A. Do you have the ability to use that or sell it? A. F for, you know this. F for what? Future economic benefits. R for, so to develop also you need a lot of resources, no? Machinery, manpower, yes. So check whether you have all the resources with you. C for cost measurement. How much money you have spent for development phase expenditure, you should be able to measure it reliably. If all are satisfied, you can capitalize. Otherwise, this also will go off to P. But one good thing about you is, in your examination, they will not give you all of this. They will only tell you, criteria got satisfied on 1st January. Criteria got satisfied on 1st January. That means indirectly they're saying TIA FRC got satisfied on 1st January. So you don't have to test for this. I have not seen questions where the testing of this is being happened. They will only give this to you in the question. Okay. So if it is satisfied, capitalize. Otherwise, P&L. Sir, this expenditure is like Tirupati Hundi. This expenditure is like what? Oh, Tirupati Hundi. Once you put money into Hundi, can you say, oops, I was thinking to put 100 rupees by mistake, I put 500 rupees, here, give it back. Can you collect it back? Oh? Once gone means gone. So same thing here also. Sir, company is saying, first year I did research. First year I did research. Research phase expenditure, capitalize a P&L. Second year research is successful. Second year research is successful. TIA FRC also satisfied. Now company is saying, first year I transferred to P&L. No, I will reverse it. I will reverse it and capitalize. Acceptable or not acceptable? Once gone, gone. You cannot claim it back. Okay, once you have transferred an expenditure to P&L means you cannot reverse it in the subsequent years and capitalize it. That's what I mean by this. There's also a popular question which kind of they ask. Reversal. Need a minute. Sir, we need 40 minutes. Sir. That's a different issue. Now you tell me whether you need 1 minute. No. Oh, don't look at me that way, pa. Sir, amortization. See, I'm very, very happy. Same as accounting standard 10. Same funda. You will start amortization from the day it is ready to use. You will charge amortization method based on pattern of economic benefits. That accounting estimate change, everything ditto. But here, no, AS26 has one extra thing. We have a concept of presumptive life. We have a concept of presumptive. AS26 says that life of an intangible asset usually will not exceed 10 years. Usually. If you can prove that you have an intangible asset greater than 10 years, then it's fine. If you are able to prove why your intangible asset ka life is more than 10 years, you can take it. Otherwise, as a thumb rule, maximum life of an intangible asset is taken as what? 10 years. Did you understand my point? If life is not given, you will take it as what? Life is given as 8. Life is given as 8. Which one will you take? 8. Life is given as 15. Life is given as 15. No, that is subjective. If you can prove why 15, if you can prove why 15, then you can take 15. If you cannot prove, then 10. That's what. If you can justify, you can take more than 10. If you cannot justify, maximum you can take is only 10. This is a concept of presumptive life. This is not there for PP, but this is being introduced only for intangible assets. This is not there in CA. Fine. Why am I saying that? Okay. No, the comparison phobia automatically comes for me between AS to Ind AS. Okay, residual concept is again same, sir, or not same. Maybe one point I'll have to say for this. Sir, usually residual value of intangible asset we take it as 0. But certain intangible assets can also have residual value also. Suppose I have a patent. What's your name? Sita Lakshmi. Big. I'll call it a Sita. So I have a software. Sita came to me and said, "Hey Macha, I would like to buy your software." Sita, Macha will not work, no? Oh, hey Prabhu, yeah, I would like to buy your software after 4 years by paying 4 lakh rupees. I am using a software, okay, and Sita has approached me saying she will buy that software after how many years? 4 years. By paying how much money? 4 lakh. Correct? That we call it as third party guarantee. And we have made a contract like that. After 4 years, I will sell this particular asset to Sita for how much value? 4 lakh. Then that 4 lakh can be taken as what? Residual value for amortization calculation. Okay, Ji? This one. Suppose if this is not there, then check. In some intangible assets you can sell also in the market. So check if there is any active market available for intangible asset. Active market means a market where there are large number of buyers and sellers. A market where there are a lot of buyers and sellers, we call it as what? Active market. So you can check, do you have any active market for intangible asset, and if at all they give, from that active market you can figure out the residual value. Meaning, if I sell that software in active market, how much money I will get. Suppose I feel by selling software in active market, I will get how much? 3 lakh. Then that 3 lakh will become residual value. If no information is given, residual value, we always take it as what? That's it. Again, not that very important, but a provision. Sir, when will you? Derecognizing means what? Derecognition of intangible asset. Recognizing means showing. Derecognition means cancellation. When will you cancel intangible asset in your books? Go to the RC. What is RC? Feb and cost measurement. If Feb stops, intangible asset also will stop. If you are sold intangible asset, can you show it or cancel it? So when you have sold intangible asset, when the Feb stops and all, intangible asset will get cancelled. That cancellation only we call it as what's a derecognition of intangible asset. When you derecognize, there will be some gain or loss that will be going off to P&L account. Disclosure is not that very important. It's fine. Okay, I think not much time. Maybe I'll take up 1 minute. Let me just find this. This anyway I'll get covered in impairment, so it's fine. This is okay. This is okay. I think okay, people. One question I will do on this, and then probably we can wind up. For now, not the class. A break I will give you. I'll have to be very clear. I think there's an RTP question or some RTP or some past exam question. I don't know. I think no RTP. RTP May 24 wala question. A good small concept question. So I would like to quickly run through this. Naresh Limited, one company, they have made some transaction. What transaction? Naresh acquired. Take your calculator. Quickly calculate things for me. Naresh Limited has acquired the business of Sunil. So Naresh is the purchasing company. Sunil is the selling company. For how much value? 1080. This only we call it as what? Purchase consideration. You know which concept is this? And this is the day they purchased. The fair value of Sunil's net asset is 5,16,000. Okay, sir, you already know. Under purchase method, how do you calculate goodwill? Tell me the steps. Under purchase method, how do you calculate goodwill? Compare PC with net assets. PC is how much? 1080. Net asset is given as how much? 5,16,000. Net asset is net worth of a business. Worth is how much? 516. How much did you pay? 1080. You paid more than worth. That means the difference will be accounted as what? Goodwill. Yes, sir. This goodwill is as per AS 26 or AS 14? It's 14. What do you have to do for this? Amortize over 5 years. So this 5,64,000 you amortize over 5 years. So current year you will amortize this much. The question here is they'll ask you how much amortization and how much is the value of intangible asset. What is the value of intangible asset at the end of the year? Goodwill is 564. You amortized this much means the value will become at the end of the year 451 200. Is that okay? That's a requirement of the question. Quickly I'm saying. Manageable. Pakka na. Move on to the next. Next. Another same question ka another part. Naresh has taken up a franchise. Franchise rights is also an intangible asset. Okay. How much did you pay for the franchise? 1,80,000. Okay. And at an annual fee of 10% of net revenue after deducting expenditure. Sir, you have purchased some company ka franchisee. Maybe McDonald's or whatever. Some company ka franchisee rights you have purchased. By paying how much? 1,80,000. Actually, you are compensating in two ways. One, immediately you paid how much? 180. And then they are saying, then you have made an agreement that using your franchisee rights, how much ever revenue I make, 10% of that revenue I will give it to you. So the purchaser is saying, I will give you 180 as cash. I will give you 180 as cash. I will also give you how much ever revenue I generate, 10% of that I will give you every year. That's what they're saying. And this franchisee will go on for how many years? 6 years. So they are asking you, they have given you the revenue as 60,000 for current year. They are asking you how much intangible asset you will show immediately, how much is amortization, how much is value of intangible assets at the end of the year. Okay, now what the standard says is this annual fees, is it a one-time thing or a recurring thing? Recurring thing. And it is based on sales, no? Is sales exclusively related to intangible assets or other factors? That means this 10% of revenue what you are paying, can you capitalize it as intangible asset or transfer it to P&L? This 10% of revenue whatever you are paying, transfer it to P&L as an expenditure. That means franchisee rights will only be accounted at what value? So you will recognize franchisee initially at 180. Okay. Now will you amortize this? Yes. Two concepts. What is it? For amortization, same concept. DA should be positive. Useful life should be limited. Here, how much is useful life? It is limited. DA. Sir, if they don't give residual value, we always take it to be 0. How do you get DA? Carrying amount minus residual value. How much did you buy the intangible asset for? 180. How much is residual value? 0. That means DA is what? Positive. Correct. So will you amortize? Yes. How much? This 1,80,000 you will amortize over how many years? 6 years. So every year how much? 30,000. After amortization, its value will become 1,50,000. That's the second point. Solution is there. I'm quickly doing it in the interest of time. Understanding no pakka. Last also there. All good. Next, Naresh incurs 2,40,000 to register the patent. So registration charges, can you add up? Yes, of course it is what? It's a drag. Okay. Naresh expects the patent life to be 8 years. They have not given cost of patent. If they had given cost of patent, I would have ignored or added. But they have not given. What is the only cost they have given? Registration charges. That means I will consider what? Patent ka value itself to be 2,40,000. Absence of information. Okay now. So patent will be initially recorded at what value? 240. Will you amortize this? Yes. How many years? 8 years. So 2,40,000 you will amortize over 8 years. Residual value is 0. So how much will you amortize? 30,000. At the end it will become 2,10,000. So you will have to add all intangible asset ka closing balance. Here, take your calculator. 451, 200, whatever I box, add it. Goodwill ka it is this value. Patent ka this value. And franchisee ka 150. Add those three and tell me what is the value. 8,11,200. That was the requirement of this question. How much intangible asset you will show in your balance sheet? Net balance 8,11,200. Same value, no? That's it. I think this is good. Okay, people. So let's take a break for around 40 minutes and resume back. Thank you.